what will the investors be looking at as they look at these earnings today?
Well, I think, as you mentioned, they're going to look both at the operations from the company with their earnings. And again, it's looking to be another strong quarter for Facebook, revenue growth and EPS growth, both about 40% this quarter. So the top line story at Facebook, the user growth story, the engagement, that continues to be a very positive story for Facebook. But of course, what is becoming as big an issue, arguably, for investors is kind of what is the regulatory oversight that may befall the Facebooks and other tech giants coming out of D.C. here.
Paul, what is the base case? Because, as we said at the top of this show, it's a tale of two cities. We've got all-time highs and celebrations over on Wall Street in New York and this grilling down in D.C. At the same time, an administration that says we care about the market. Now, if you care about the market, you care about what happens to tech. So I just wonder how conscious they are of that.
Yeah, I think if you're these tech companies, particularly the consumer-facing internet companies, you really have to be ahead of the curve here with Washington. What you do not want is a heavy-handed regulatory response coming from Washington onto your business. So it's going to be incumbent for these tech companies to really be aggressive, be out in front of this, try, put out some policies that are very strict and very clear for their users that preserves kind of the open internet. What they don't want is regulation, but at the same time, they clearly have to be sensitive to kind of some of the issues that are emanating there.
Paul, there was a story yesterday. Facebook announced that it was planning to double its security and safety staff to 20,000. I'm just wondering how you're expecting that to factor in when we get the earnings after the bell today.
Yeah, so this is a company that, again, the revenue is growing about 40%. That's the good news. But their expenses are expected to grow about 40 to 50% this year and probably into next year. That's what the company's kind of signaled. So I suspect that they may have to shift some of their expenditures into some of these regulatory issues that may require either more headcount or more R&D to provide some technical solutions here to monitor the traffic that goes onto their site.
Paul, what can I understand from the WPP earnings that David and I and Lisa were discussing just yesterday? They're having some troubles. Can I get any read-through as to what this means for Facebook and others, or is this completely separate to what's happening there?
Well, the big ad agencies, have definitely brought down their growth forecast for revenue. That seems to be a little bit specific to their business models. Their customers are cutting back on the fees that they're paying to the big ad agencies. So when you take a look at global ad spend, it continues to be a low single-digit growth business, kind of globally. But what we're seeing is a huge shift of ad spend from traditional media to the internet. So we saw huge numbers out of Google just a couple of days ago. We're going to see 40% top-line growth out of Facebook. So internet advertising continues to be a high teens, low 20s growth story in a world where overall global ad spend is a low single-digit growth business.
And Paul, going back to the regulatory issue, more important perhaps than what's going on with the social media is really the percentage of the new mobile ads going to Google and Facebook. Yep. Really is like 70%. It leaves almost nothing for the rest of the world.
Right. If you're thinking about this, the global internet ad business, it is not a good structure, in my opinion. It has really become a duopoly. And if you're an advertiser, you really don't like the way this business is developing because you really only have two significant places to place your money. Twitter's not there. Snap is not there. So it's really Facebook and Google.